Good afternoon, everyone. Myself, Dr. Rani, Assistant Professor, IIMT College of Law. Now, today's topic is New Economic Policy of India. Economic policy refers to the actions that governments take in the economic field. It covers the system for um, setting levels of taxation, government budgets, the money supply, and interest rates, as well as the labor market, national ownership, and many other areas of government interventions into the economy. The new economic policy was implemented by Dr. Manmohan Singh to improve the condition of our Indian economy. It is related to the taxation, it is related to the government budget and overall development of the infrastructure of our country. Pre 1991 economic scenario in India. Indian economic policy after independence was influenced by the colonial experience, which was seen by Indian leaders as exploitative in nature and by those leaders exposure to Fabian socialism. Nehru and other leaders of the independent India sought an alternative to the extreme variations of capitalism and socialism. In this system, India would be a socialist society with a strong public sector but also with private property and democracy. And as a part of it, India adopted a centralized planning approach. Policy tended towards protectionism with a strong emphasis on import substitution, industrialization under state monitoring, and state intervention at the micro level in all the businesses, especially in labor and financial markets, a large public sector business regulation. Now, the drawbacks of pre 1991 economic policy, license Raj. The license Raj or permit Raj was the elaborate system of licenses, regulations, and accompanying red tape that were required to set up and run businesses in India between 1947 and 1990. Next is import substitution. Import substitution, industrialization, ISI is a trade and economic policy which advocates replacing foreign imports with domestic production. ISI is based on the premise that a country should attempt to reduce its foreign dependency through the local production of industrialized product and was intended to promote self-reliance. But this meant the monopoly of Indian industries and lack of incentive for them to improve the quality of products, which hampered consumer interest. So import substitution plays a very important role in new economic policy, and it gave emphasis on the local production in the country, and it is the best option for the development. Before the process of reform began in 1991, the government attempted to close the Indian economy to the outside world. The Indian currency, the rupee, was inconvertible, and high tariffs and import licensing prevented foreign goods reaching the market. The labyrinthine bureaucracy often led to absurd restrictions. Up to 80 agencies had to be satisfied before a firm would be granted a license to produce, and the state would decide what was produced, how to produce, at what price, and what sources of capital were used. The new economic policy 1991 was started by P.V. Narasimha Rao and Dr. Manmohan Singh. 1991 economic crisis. By 1985, India had started having balance of payments problems, and this is due to more expenditure by the government, whereas the income generated was less. In addition, there was huge disparities between income and expenditure. And by the end of 1990, it was in a serious economic crisis. The government was close to default, and its central bank had refused new credit. And in 1991, India met with an economic crisis relating to external debt. The government was not able to make repayments of its borrowings from abroad, and the foreign exchange reserves, which were maintained to import petroleum and other important items, dropped to levels that were not sufficient to last even a fortnight. And the crisis was further compounded by raising prices of essential goods. Advent of IMF and World Bank. India approached the International Bank for Reconstruction and Development (IBRD), commonly known as World Bank, and the International Monetary Fund (IMF) for help. India received $7 billion as loan from these agencies to solve the crisis. And at the time of the crisis in India, the IBRD and IMF uh, helped India in the economic crisis. It had to pledge 20 tons of gold to Union Bank of Switzerland and 47 tons to Bank of England as part of the deal with the International Monetary Fund. And in addition, as part of the bailout, IMF expected India to liberalize and open up the economy and remove trade restrictions between India and other countries. There is no time to lose, neither the government nor the economy can live beyond its means year after year, and the room of man where to live on borrowed money or time does not exist anymore. We need to expand the scope and the area for the operation of market forces. This is by Dr. Manmohan Singh. That was a speech on 24 July 1991. Stabilization. These are short-term measures aimed at solving the immediate cause, the 1991 economic crisis. These included correcting the weakness which resulted in the balance of payments crisis and steps to bring the inflation under control, structural measures. These are long-term measures aimed at improving the efficiency of the economy and increasing its international competitiveness by removing the rigidities in various segments of the Indian economy. And these reforms fall under three leads: liberalization, privatization, and globalization. Liberalization was done in various sectors in the following ways: deregulation of industrial sectors, industrial licensing was abolished for all but product categories: alcohol and cigarettes, hazardous chemicals, drunks, explosives, etc. Many industries which are reserved for public sector in have now been deserved. Only railways, defense equipment, atomic power generation have been reserved with the public sector. And market has been allowed to determine the prices. Financial sector reforms reduce the role of RBI from regulator to facilitator of financial sector, and these reforms led to the establishment of private banks. FDI in the banks was raised to 50%, and but certain managerial aspects have been retained with the RBI to safeguard the interest of the account holders. So liberalization, through liberalization, all the licensing provision removed, expecting the alcohol, cigarettes, and hazardous chemical drinks to smooth conducting of the economic activities in our country. Tax reforms. Corporate tax, which was very high earlier, has been gradually reduced, and the tax procedures have been simplified, and the rates also have been lowered. 1973 and 74, 11 tax slabs with rates from 10 to 85%, and in 1990, 91, in five budgets between 1991-96, PM Manmohan Singh reduced IT slabs to 3, 20, 30, and 40%. Next is foreign exchange reforms. The rupee was devalued uh, against foreign currencies, which led to an increase in flow of foreign exchange. Market has been allowed to determine the foreign exchange rates. Next, trade and investment policy reforms. Dismantling of quantitative restrictions on imports, reduction of tariffs, rates, taxes and imports, and removal of licensing procedures for imports, except in case of hazardous and environmentally sensitive products. Quantitative restriction on import was also fully decreased later, and export duties have been removed to promote exports. Next is privatization. Privatization means the transfer of assets from public sector to private sector. Privatization helps in improving financial discipline and to facilitate modernization. Privatization helps in strong inflow of FDIs. Disinvestment, privatization of public sector enterprises by selling off part of the equity of PSEs to the public is called disinvestment. Criticism, assets of PSUs has been undervalued. The money from disinvestments were diverted to meet the shortage in the government revenue rather than in creating new assets. Due to the privatization, the burden of the government can be reduced through privatization. The chances of the employment increased and the work can be done at the proper time. Next is globalization. Globalization is the process of international integration arising from the interchange of world views, products, ideas, and mutual sharings and other aspects of culture. It means globalization means to integrate the our country's economy to the world economy. Outsourcing, in outsourcing, a company hires regular service from external sources which was hitherto provided internally. It is an outcome of globalization. India became a major source of outsourcing jobs. For example, BPO, banking services, World Trade Organization. World Trade Organization was established to administer all the multilateral trade agreements by providing equal opportunities to all countries in the international market for trading purposes. And India has been an active member of WTO, which aims to enlarge trade between countries. So the advantages of the new economic policy is to increase the growth rate of the economy and create enough foreign exchange reserves and stabilize the economy and convert the economy into a market economy by the removal of the unwanted restrictions, allow the international flow of goods, capitals, services, technologies, human resources, etc., without too many restrictions. Now, what are the main negative impacts of NEP in India? The poor unskilled labor continue to work in low productivity jobs, drawing low irregular wages, and negligence of agriculture. During the reform period, agriculture sector has been neglected and the growth of agriculture sector has declined due to the growth of the service sector. Large dependency on the foreign investment in several sectors of economy and the rate of the consumer price index has increased over the years, and inadequate privatization due to strong resistance from the labor union. The policy aims to increase public investment in education in India, uh, to increase the GDP growth and for overall development of our country. So, new economic policy is a very beneficial for our country in the development of the infrastructure, in the field of education, in the field of technology. The new education policy developed in all the areas, and it was a good decision in improving the condition of our uh, economy in every aspect for the development of mankind and for the development of our country. Thank you very much.